Hello and welcome. I'm Craig Harrington, and today's topic is China's market manipulation. According to a report released by the European Federation of Iron and Steel Industries, the Chinese government has systematically undermined the international trade system in order to give preferential treatment to its own domestic producers in spite of international agreements and international law. In doing this, it has created an artificial comparative advantage within the Chinese domestic steel market in order to drive down the prices of Chinese-made steel and iron goods and therefore push out longtime producers in Europe and the United States. The Chinese ascent through the steel and iron industry has been nothing short of astounding. In 2006, China for the first time became a net exporter of steel and iron goods. By 2007, it had captured the world's largest market share, controlling 20.7% of the overall steel exports for the entire globe. The Chinese government has created for itself a steel and iron juggernaut which cannot be competed with internationally, and it has done so through the use of subsidies, grants, market interventions, capital infusions, preferential tax treatments, and import embargoes. All of these have kept the domestic market, the Chinese market, as a captive market for Chinese producers, while driving down the prices of Chinese-produced steel in the international markets. The Chinese system presents the biggest problem to the United States because of our fiscal situation in this country. The Chinese government can afford its program because it brings in hundreds of billions of dollars annually, much of that money coming from the United States. At the same time, the United States is forced to accept hundreds of billions of dollars in loan obligations annually, much of that coming from China. The United States and China are working in opposite directions, but they're trying to compete on the same playing field. The Chinese are gaining money. We are losing money. We cannot afford the same subsidy programs that they can give their producers. We cannot compete with them internationally. The worst part of this system is the fact that the Chinese government is a member nation to the World Trade Organization, and almost every one of these business practices, which has been used to make them into an international superpower, is illegal in accordance with their WTO agreements. The World Trade Organization rules against the United States in 9 out of 10 rulings. They also rule against the Chinese, but unlike the United States, where we comply to the trade demands of international groups, the Chinese government simply ignores the recommendations. Even when the WTO threatens the Chinese with sanctions, they know that because they've captured so much of the world's production in so many consumer areas, they can afford to simply ignore them. The United States has to comply with the interests of an international organization which is not looking out for us. The Chinese can simply go the other way. This is not a situation where the United States can compete. We need to get the Chinese in compliance with their WTO agreements, or we need to find a way to start ignoring them ourselves. We need to look out for ourselves first and create an industry where the United States is a champion. On behalf of concerned citizens, I'm Craig Harrington with EconomyInCrisis.org News.
Wake up, America! Open up your eyes! Wake up, America! Wake up!
Produced by EconomyInCrisis.org.